Data from the National Bureau of Statistics shows that China's industrial output rose 5.4% year-on-year in November, down 0.5 percentage points from October. Analysts attribute the slowdown to slackening demand in such sectors as auto manufacturing, chemicals, and electronics. Retail sales also moderated, rising 8.1% from a year ago to 3.5 trillion yuan in November. That was the slowest growth since 2003. A sharp drop in auto sales was to blame for the downbeat numbers. In comparison, fixed asset investment growth quickened to 5.9% in the January to November period. That's thanks to a strong expansion in the private sector and robust growth in manufacturing and infrastructure.
Fixed asset investment has been gaining momentum in the past few months. We believe that will continue throughout this year and into 2019.
On the real estate front, China's property investment rose 9.7% in the first 11 months of this year. That was unchanged from the January to October period. Property sales by floor area grew 1.4%, down 0.8% from the January to October period. The real estate sector has been cooling in recent months. That's because a government crackdown on property speculation and thinning margins for developers led to a surge in failed land auctions. Analysts say the weak November data shows that the downward pressure on the world's second-largest economy is increasing, and that could get even worse, given that the trade row with the United States is still ongoing. But others argue that Beijing's recent move to ease monetary policy and cut taxes could ward off a damaging slump. And China remains on track to hit this year's growth target of around 6.5%. Michelle Vandenberg, CGTN.